Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Well, another week and another few SPACs up on the board. Let the good times roll. First off, we saw quite a nice reception from stock market investors for the newest EV manufacturer going public. The market valued electric vehicle maker Lucid Motors at $62 billion on Tuesday after a deal to merge with blank check firm Churchill Capital Company IV, sparking some concerns about the real worth of the company, which has yet to start regular production of a vehicle. In comparison, General Motors was worth about $72.5 billion at midday Tuesday. Lucid's first electric car, the luxury Air, won't go into production until late 2021, later than the spring 2021 launch initially planned. Officials on Tuesday said they do not expect Lucid to be cash flow positive until 2025. While Lucid's market cap started the week strong, the balloon deflated a bit as the week wound down. Next up on the SPAC freight train is Xos Trucks, a maker of electrical commercial vehicles that agreed to go public through a merger with a SPAC NextGen Acquisition Corporation. The deal values the combined equity at $2 billion. To support the transaction, the special purpose acquisition company will raise $220 million from investors including Janus Henderson Group and a group of truck dealers led by Thompson Truck Centers. Some of Xos's customers include UPS, armored car service company Loomis, and transportation company Lone Star. And to round out the SPAC hat trick this week, AI, a LiDAR startup that developed its technology for use in autonomous vehicles as well as to support advanced driver assistance systems in passenger cars, is going public through a merger with SPAC CF Finance Acquisition Corp. III that will value the company at $2 billion. Under this deal, AI said it was able to raise $225 million in a private investment into public equity or PIPE from institutional and strategic investors that include GM Ventures, Subaru, Intel Capital, Hella Ventures, and Taiwana Capital. Okay, enough of the SPACs for the time being. In other news, Cazoo, the Carvana of the UK, is weighing plans for an initial public offering in London as soon as this year that may value the company at $7 billion. The UK firm is reviewing the merits of an IPO this year after the successful listing of German online used car dealer Auto1 Group, which surged in trading after raising 1.8 billion euros or $2.2 billion US earlier this month. No surprise that Cazoo has also attracted takeover interest from SPACs. The convergence of online car shopping sites with SPACs is like crossing the streams in Ghostbusters. Recogni, a startup developing artificial intelligence hardware for autonomous vehicles, announced that it has closed a $48.9 million funding round led by WRVI Capital, who was joined in the round by Mayfield Fund, Toyota Motor Corporation, BMW Group, amongst others. California-based Recogni is developing an AI inference module that can be installed inside a vehicle to run its autonomous driving software. The module is based on a custom application-specific integrated circuit designed by the startup's engineers. Tony Remus and the Aztec team were on fire this week, announcing both a funding round as well as an acquisition. First up, Aztec, known for its patented Aztec device and remote scanning, programming, and calibration services to the automotive aftermarket industry, announced a strategic investment from 3M. Second, Aztec announced the acquisition of ADAS Think, a company that retrieves information related to the vehicle-specific advanced driver assistance systems and identifies required ADAS procedures and calibration based on labor operations in an automotive repair estimate. The ADAS Think technology leverages the vehicle identification number to properly identify the vehicle's build information. Within that information, the technology identifies the advanced driver assistance systems on vehicles that have been impacted by the vehicle's damage. Additionally, this technology identifies OEM calibration requirements and instructions. The company represents the 10th add-on acquisition for Aztec and private equity sponsor Kinderhook's 101st automotive-related transaction. Finally, car buying site GetACar raised a $25 million round of funding, bringing its funding total to $48 million through 3 rounds over approximately 2 years. The latest round was led by 3L and Luxor Capital. Torch Capital also participated in the round. Based in Philadelphia, GetACar counts as differentiators the ability for customers to complete the purchase of a vehicle online in as little as 12 minutes, receive real-time finance options, a 365-day warranty, at-home test drives, and the option of returning the vehicle in 7 days if they're dissatisfied with it. Congratulations to Yossi Levy and the GetACar team. So on to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today we'll look at two companies to watch, Car Capital Technologies and Fuse Autotech. Our first company to watch, Car Capital Technologies, was founded to provide dealers with capital and advanced technology to help all customers buy the cars they need. With 100% automated instant approvals available to their dealer partners, Car Capital makes it possible for any driver, regardless of credit history, to feel confident in the ability to purchase a vehicle when entering the dealership. Every dealer partner has access to the Car Capital proprietary web-based platform, Dealer Electronic Auto Loan Systems, or DEALS for short. DEALS provides the tools for Car Capital's dealer partners to do what they do best, sell cars. Their program allows the network of dealers to make their own approval decisions based on the economics of each unique car and consumer. If you're a dealer looking to offer automated instant approvals to 100% of your customers, regardless of credit history, check out Car Capital. Our second company to watch this week is Fuse Autotech, a finance management system that consolidates online and in-store technologies for a seamless customer experience from start to finish. Fuse Autotech provides one go-to application that streamlines vehicle transactions, reduces cost to sell, maximizes profits, and ensures sustainability. Their easy-to-use, replicable process allows salespeople to create and close a deal from start to finish. Fuse Autotech lets your dealer team shine with fast, easy, straightforward vehicle transactions that customers love. Fuse Autotech's proprietary software combines artificial intelligence, technology integration, and process automation to streamline vehicle transactions. Shoppers are asking for a smarter, faster way to buy a car. Fuse Autotech is the answer. With Fuse, dealerships are able to close more deals by empowering their entire sales force to take a customer through a complete transaction from start to finish. So that's your weekly Friday 5, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity. I'll keep my fingers on the pulse of deals being done so I can share updates each week with you. If you're an early stage automotive technology entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.